Well, while yesterday it was a bit of a disappointing day of trade, the fact that we managed to close in at the session lows and even gave up that 18,700 print. But I think the good news is coming in from the southernmost part of the country, Kerala. Yes, you heard me right. And monsoon onset has already happened. And what can be better news for markets than this?
Yep. And the rain has started. When it rains, it pours in Bombay. It's one of those patches where we pray for the rain to come, and when it starts pouring, you say, rain, rain, go away. Yeah. But right now, it's about rain, please come. And there you go. The pictures of monsoon onset. So monsoon has officially hit the coast of Kerala. And the IMD believes that the monsoon progress is going to be accelerated in next 48 hours. So monsoon in Kerala means that it should reach Mumbai in next 5 to 7 days. And in case, ladies, you've not bought your umbrella, please buy it.
Already geared up. Avan even has gumboots.
Yeah. I actually checked the Google weather map, and there is a 50% probability of rain in Mumbai the entire next week. So
I really hope so, because we could definitely do with some respite.
We shall
from the
archive
heat.
Aisha's statement that rain please come, because after 2 weeks it would be rain, rain, go away, it's pouring and it's raining. That's nature for you. Yeah. But yes, when it rains in Kerala, we all celebrate, and that's what we are doing today.
Yep, and we're just waiting for the monsoon to actually make its headway into the rest of the country as well. By the way, yesterday as well, we got a little bit rained out here in Mumbai, only because of the price action in the markets. Couldn't quite sustain that 18,700 print. Although the good news this morning is that the global market handover has been strong. If you just look at how US equity markets panned out, the Dow gave you a gain of about 0.5%. Similar was the price action across S&P 500 index. In fact, it was a bigger move for the Nasdaq, and that managed to eke out gains of a solid 1% or so. So, yep, while Trump indictment is on, and that's keeping most people busy, a bear market for the S&P 500 index clearly is ruled out, and the Dow Jones managed to post its third consecutive day of gains. Eurozone, though, has entered into a technical recession, if you please. But, yep, the equity markets are singing a different tune even there as well.
We are 100 points away from an all-time high on the Nifty, and frankly 100 points for an index which is at 18,800 really does not matter. Yes, we can talk about the retreat post the credit policy, mild profit booking by institutional investors. So for me, yesterday's price action, even if you're a day trader, you should not read too much into it. Markets are surely headed higher. I think the concern on rain, at least monsoon delay, that is getting addressed. If the spread of the monsoon is accelerates in next couple of days, so that fly in the ointment, that chink in the armor, if I may use that, if I extend my English vocabulary with that, that also will get addressed. So I think in the market right now, there is definitely a degree of confidence because global cues and flows are strong. There is an element of FOMO which is visible in the way how the mid and the small cap stocks are moving, and there is a degree of comfort which now is going to come given where oil prices and commodity prices are headed. The risk for the Indian market always was that international energy prices are down, but local vegetable prices and cereal prices may not go lower if there is a risk to the monsoon. And I think that it's too early to judge that. And with monsoon coming around the corner, that also seems to be getting addressed. So if you look at the trader screen right now, I mean, that's important. It's important for us to point out that what was the tone and tonality of the FNO activity yesterday and what exactly the mood in the brokerage radar was. So global cues are positive. Net flows, I would say negative, but not alarmingly negative. And FNO positions, at least, were not all that great. So the market yesterday lacked any kind of a fresh commitment, but it's okay. I mean, just because you had a pit stop does not mean you are out of the race.
Yep, we missed that life high by just about 100 odd points, and we tested that 18,600 mark yesterday. But the other talking point as well across the globe is with respect to the US-Iran deal, and actually you have complete clarification coming in from the White House National Security Council saying that reports of the fact that US would give Iran sanctions relief to export oil in return for Tehran reducing their uranium enrichment is absolutely false. You had crude oil prices sliding as well to sub $70 per barrel. So continuing to see the demand concerns outweigh the tighter supply. That's what's happening when it comes to crude oil. But yes, of course, back home, Nikunj, the fact that you had the broader markets as well underperforming. The small cap index has been gaining for 15 straight sessions on the trot and now put the brakes on that gaining streak. So the fact that while we're looking at that life high print for the frontline indices, the broader markets have been supportive so far.
See, the small cap index is not close to its all-time high. And this is a number which it had hit almost 18 months ago. Nifty is 90 points away, or 100 points, yesterday was 100 points away from an all-time high. The mid-cap index had already hit a fresh high. Even though the small-cap index has trended up very smartly, if you look at the last 15 days of graph, it is still 15% away from an all-time high. Which means that the market can still add weight, muscle, or even fat, because typically when you see these new highs which are made in mid-cap indices and in Nifty and in Sensex, the small cap index actually has to catch up. And the P multiple of the small cap index is also not that alarmingly high that small cap stocks are very richly or there's a fraud there. So I think the market right now still, I mean, you'll have to work hard now, you'll have to treasure hunt now. That's the point I'm trying to bring out here. But I think in terms of a red light, in terms of something alarming, in terms of something which looks like a concern for me purely based on technicals, fundamentals and liquidity and valuations, I don't think even in the small and the mid cap space there is reason to get really perturbed or concerned about.
Okay, fair enough. That's the view coming in on the overall market. And yes, indeed, of course, that very close linkage as well with the monsoon, that continues to remain a critical factor. The fact that the IMD has gone ahead and said that they expect the monsoon to advance soon as well, and other parts of South India are going to see advancement after we did see those showers hitting Kerala. And of course, do remember the fortunes of the Indian economy are very closely linked with the southwest monsoon to track the trajectory of our GDP, given that agri-economy contributes nearly 20% to India's overall GDP. So it continues to remain fairly critical. But Aisha, the other talking point as well, the Kotak stake sale kept us all abuzz on our phones last evening.
Yeah, absolutely. And, I'm just looking at that. Canada Pension Fund is looking to sell that 1.66% stake worth about $754 million in Kotak Mahindra Bank. That is what reports seem to be indicating. And they hold, I think, about 4.3% equity.
Yeah, I mean, they were one of the early investors. They have really benefited by their confidence in Kotak Mahindra Bank. I think it must be more than a 10-year-old investment for them. Now, I think this is just pure profit booking, nothing else. The interesting bit here is that Kotak Mahindra Kotak Mahindra Bank in this entire market uptrend actually has not really participated, and we were just a coincidence. Kunal and we were discussing this yesterday, that why Kotak is not participating. I guess somewhere markets knew that there was an overhang which was coming, and typically when a stock is underperforming and when there is a large block deal which goes through, then that really checks the overhang. What happens is that Kotak Pension Fund could have, Canadian Pension Fund, I beg your pardon, they could have been selling in the cash market, which they are not now. So that overhang, I think, is going to get lifted when this block deal is over. Also, to just point it out that, Kotak Mahindra Bank and Uday Kotak has gone on record and has said that, look, the succession planning is well in place. Markets maybe there's a bit of a suspense that, who is going to be succeeding Mr. Kotak's place in Kotak Mahindra Bank. But barring that, I don't think in terms of growth, in terms of the book value, in terms of the CASA, I think the franchise, is extremely strong. And the valuations which were 5 times book, 6 times book also for Kotak Mahindra Bank, that concern is also behind us. So my sense is that once this block deal goes through, the supply overhang reduces and the stock in a sense could rediscover its mojo.
And while we're on the subject of what's happening within the commodity market, I think it's important to highlight that sugar could be the key sector today because we've already seen the sugar prices on Thursday night itself have rallied very, very sharply, with New York sugar actually posting a one-week high. Remember, it's the El Nino impact, which is going to cause a bit of a drought-like situation, and which is why, this is critical for sugar crops, and that's going to really lead sugar prices to soar. The last time this happened in Asia, at least, was back in 2015 and 2016, which had caused prices to soar. So the entire pack, the entire sugar cluster, is something that you may want to look out for. It's the El Nino criteria here at play. But Nikunj, a very interesting chat coming up with Mr. A. Velumani as well, the founder of one of India's largest diagnostics chains. And then, what made headlines was his ouster as well.
I've interacted him in person for the first time after he actually exited. And to give credit to Mr. Velumani, he started Thyrocare with money he borrowed from his wife, his late wife, with a capital of 5,000 rupees. All he had an idea, which was that there are two Ds which need to be disrupted in India. The cost of thyroid, which was like 10 years ago more than 1,500 rupees, and the cost of vitamin D test. He came out and he actually disrupted the prices. And then, even though he's a first generation entrepreneur, he incubated this business, he exited. He exited at a price of 1,300 rupees. That time the P multiple for the entire Thyrocare industry, in the diagnostic industry at the peak of the COVID crisis was 60-70 times. So at the peak of the COVID crisis, he sold at the peak valuation, and after that all diagnostic stocks are around 50 to 70%. And guess what? He's buying diagnostic stocks now because he's finding value there. And he said, I'm open to come back to Thyrocare because I know there is a mess.
Yeah, okay, let's hear out.